Hi, this is Kirk Davis at the Green River Community College Small Business Development Center. Hey, I wanted to share a seminar that I did earlier today at the Auburn Area Chamber of Commerce, and it was on the topic of business funding, and this is part of a series that we're doing called the Business Builder Series. In fact, I wanted to share with you the topics that we're covering over the next couple of months. You'll see that the funding topic is what we covered here in December. We've already done 4 other topics, and we've got some more to go here. Next month is on the profit driver. Today's December 20th, and they say that may be the end of the world tomorrow. However, I'm betting that there will be a few more months left after that. So we do have topics, and would love for you to join us at the chamber. This is our team here at the Small Business Development Center. Deanna at your top left-hand side, Deanna Burnett Keener, Kirk Davis, me in the middle, and Jody, our program coordinator here on the bottom right-hand side. Our phone number, the one you see here on the screen, goes to Jody. She organizes us and sets our schedules, and if you'd like to meet with us, that's the best number to call. And then our Facebook page, you see there on the screen, is a way to connect with us on Facebook and see what we're doing, see what's coming up, and we're a place where we can share our thoughts and things that we're focused on. So we'd love to have you join us there. This is an overview of the economic impacts that we've had since 2001 through December 2011. Fairly soon here we'll have December through the next year, through December 2012. But in the last 11 years or 10 years, we've had this many advising sessions. You see the counseling hours there, the jobs created or saved. But the one I wanted to point to is the $81 million of business loans and capital formation. A lion's share of that was done by Deanna, because she is absolutely amazing at helping businesses find sources of funding. Most of these companies come to us through being turned down at the bank. So when we get them, we have to actually take them in a situation where they've already been turned down by the bank. We help rework the loan application and help them position themselves or their businesses, or sometimes we have to strengthen the business in order to position it for business loans or business funding. So Deanna and I really have a great time helping these businesses find funding, and it's been very significant, I think, in terms of an economic impact in our community. You'll see the $950 million of estimated revenue generated, and the almost $28 million of estimated taxes generated from this activity. That's all determined by an independent third party who looks at the economic impact of the Washington Small Business Development Centers throughout the state. Now, I have some goals for you as a business. One of them, of course, is I like to see your business grow by an additional $1 million. I understand that not all of you want to grow by that much money, but we are focused here in 2013 of helping businesses achieve high growth. So Deanna and I are looking forward to working with you if you also have a goal of growing your revenue by an additional $1 million in 2013. Now, sometimes that growth doesn't always happen in the first year, but we strengthen your business, we help position it so that it can grow at least $1 million, and then we set the next goals after that. We want that to result in a minimum of $250,000 of income per active owner in the business. So we have a goal for the business, a revenue goal for the business of adding $1 million, but making certain that your personal income gets up to $250,000 so you can be taxed along with all the other 1%ers, I guess, that are out there. So we'll see what the new tax rates are and what the new tax levels are. But we also want you to be able to take a 4-week vacation without having to check back in with the business. So the business should be able to run itself without you, essentially. So we want to work with you on high growth, on business development, so that you can achieve your goals. The reason that I wanted to mention this when it comes to business funding is that the real reason for business funding is for growth. A lot of times, I was a banker with Bank of America and U.S. Bank, and Deanna has been in banking for like 20 years. But a lot of times, businesses made big mistakes. A lot of times by just buying a piece of equipment out of cash, and then they're out of cash. They can't make the payroll, and they'll come back to us as a banker and say, "Well, can I fund it now? Can you do a loan for me now that I purchased it?" And we'd try to find ways to do that, but it wasn't the best way to go about it. We really want you to be able to conserve cash by financing the growth of your business. So if you're adding locations or equipment or people or technology to your business, we want to help you finance that so we can conserve your cash for growth. But the biggest legitimate reason for getting additional financing for your business is to grow your business. And every once in a while we have businesses come to us because operationally they've had diminishing clients or profit margins, or they get behind, and so they want help with funding for other reasons and growth, and that's really not good. We want to help you keep focused on growth. Now, I feel like the funding conversation should start with a growth plan. So I'd like to have you think in terms of $1 million of additional revenue divided by 52 weeks, because we want to break this down into a weekly goal in order to reach $1 million divided by 52 weeks. I'm just rounding, is about $20,000 of income per week, and you divide that by your average sale per customer, and then that tells you the number of additional customers that you need per week. So this starts to figure into a growth plan of what we're trying to get to is an increased number of customers per week, and then what kind of financing might we need to actually get there. To me, we don't start with financing in your business. We actually start with this little chart here, which is starting with operational excellence. We want you to do a really good job to create customer happiness. So we focus on the customer experience in operational excellence and try to actually get that word of mouth going so that people are talking to you and say, hey, you should be doing business with this company. And then that helps you with your sales, marketing, and advertising, which is step 2, is once you have that strong operational excellence, to start to really focus then on getting your sales up to the current capacity of your business based on the number of people that you have, or maybe if you're an online business, you have maybe unlimited capacity for sales. But it's the idea that we want to get the operational excellence great first, and then we try to get the sales up to the capacity of the business. And then our third focus after that is improving the profits of the business so that you have enough cash now to invest in this increased capacity, which is number 4. So what we're trying to do is make it so that we're taking all the cash we can get from improving our profits and reinvesting that into an increased capacity for your business to be able to, again, exercise more operational excellence and to get yourselves up to the new capacity. And then the cycle goes on and on. So these are some sources of funds for you to think about. And I might be going a little fast because I have a short time here, but you can pause the slides if you want to go more in depth here. But these are things that we typically work with, helping people look at their personal funds that they have available to start a business, or I know this isn't nice, but friends, families, and fools, people that you can kind of, who know you, who like you, trust you, and will help support you. Partners you may need a financial partner in your business, somebody who will be part of the business, or crowdfunding is a new thing I'm going to talk a little bit more about. Private offerings is something that's a little more formally done through the Securities and Exchange Commission, and you may need the help of an attorney or a CPA to help you prepare for private offerings, or there's angel or VC type funding available, but you have to meet their criteria and do it on their terms. And so it's you're making money for other people, yourself and other people, but you're trying to make your investors happy. Now, when you work with banks really don't want any risk. So the things that you see here on the right-hand side are, having a high credit score. They want to see that you have a net cash flow after all expenses that can cover the loan payments. They want you to have a contribution to the loan. So banks won't do 100% loan. They want you to have a 20 or 30% of your own money in there, so that it's not too easy for you to walk away from the game. And then they want you to back it up with collateral, so that if the worst happens and you can't make the payments or the business fails, they can come get your stuff and they can pay it back. So to make a good deal with the bank, you have to be able to show them these 4 things and make it so that they can't lose. Now, the loan application, when you apply to the bank for a loan, 2 years of personal tax returns, 2 years of business tax returns. If it's a larger loan, real estate loan, you may need 3 years. But a personal financial statement, which the bank can get you a copy of that form. The loan application, which the bank can give you a copy of. You want to write up a cover letter that describes the kind of funding that you're looking for. And then if you're a brand new business, you'd want to present them with a business plan as well. That's when you're applying to the bank. So I came across this. I know it's a little humorous. This is a meme that's very popular on social media. I think this is like the most annoying girlfriend meme or something like that. But it's the concept of date before you marry. If you're an entrepreneur and you have a business and you know you're going to need funding for growth, start to get to know the bankers, get to know the funders, and get to know the venture capitalists or the angel groups, but start to move your social circle towards the people who do invest in businesses. So a lot of times people come to us and want to invest, but they don't have any contacts. They don't know anybody with money, and none of their social circles are with those people who invest. So we're showing people how to use social media to connect with very successful people who later down the road, as they get to know you, like you, and trust you, can help you with funding because you have that connection. But we do recommend building those connections before you try to go out and ask for money. It's a little harder if they don't know you or trust you. Now, just a little bit of information here on crowdfunding. Crowdfunding is a new thing, and you see on the left-hand side, Fundable, Kickstarter, Rocket Hub, and Indiegogo. Anyway, you can pause this if you need to look at the slides here. But they have different purposes, and there's different ways that you can do these rewards. I wanted to show you, this is a great infographic I found. I appreciate this, it was from fundallbeall.com. But the way that this is working is you want to build up your social network because it's people online who come and contribute to the crowdfunding. You set up a reward system, but the most important thing is your storytelling. So you engage your supporters, you set up some incentives, and you show them and explain to them why they want to be a part of this and be a part of your success and how that's going to benefit them. And then our final slide here is about the investor pitch. So this is part of telling your story. This is something that I use with my clients to help them tell their story to investors. So the About Us, they want to know a little bit about who they're getting into business with. The market problem is probably the most significant part of this, is because you have to make a really good case for why we need your new product or service. So setting up the market problem makes everything else go well. The market solution is what you're offering as a business. Give us your market research and help convince us, give us confidence that there really is a market, that they really will adapt your new product or service over what they're currently doing. Make certain that we know you know who the competition is and how you're going to compete. Tell us your marketing plan. But number 7 is the big money maker, and that's your team. Who have you surrounded yourself with? What is their credibility? How likely are you and your team to be successful? So you want to build us up with their resumes and their credentials and their accomplishments so that we feel like you have a successful team to help you be successful. Then the financial projections, current status, where you're at, and where your business is at in the process of growth. And then what you're going to do with the funding once you have it. Where does that money go? And so this becomes, we actually use this as part of a pitch deck, PowerPoint slides, these 10 slides, and then we actually have a written presentation that we give to investors when we go to them. So whether it's a private offering or if it's a pitch to angels or VCs or maybe to even partners, we use this kind of approach to help build the business plan and the executive summary. Well, I hope this has been helpful to you. Feel free to ask any questions. Please contact us if you'd like. We would love to talk to you and help you with your funding needs this year. So have a good day, and look forward to meeting you.